In today's video, we're going to take a look at every aspect of the DXY, the US dollar index, because this is really the driver for markets, and this is one reason why markets were so slow this week. However, I do think we have an incredible opportunity coming up as early as next week. Okay, so let's go ahead and get right into this. Looking here at the 4-hour time frame for the US dollar index, the DXY. Now, this week was pretty slow. It was also kind of frustrating to trade. I don't know about you guys, but the way I trade, it really just wasn't very conducive to that. Just because we had a lot of choppy price action, which you can see here on the DXY, really all week long, it has just been a kind of difficult market to read until you realize that really this is all just range-bound price action between 105.60 and 107.20. And we also have these two trend lines that you see here. So this is really what I want to talk to you guys about today, because I do think that starting next week, we do have the chance, okay, for a much bigger opportunity here for the DXY. And the reason this matters is, once again, this is a key driver for markets, not just the euro and the pound, but also for equities, for gold, everything. I mean, even oil, everything else kind of revolves around this. Although gold and oil are a little bit more tricky right now because of certain global events that are happening. But really, this is a critical driver for most markets. Okay, so looking at the DXY, first of all, we know that this market is in an uptrend. It's been trending higher ever since July, and it's also holding above 105.60. So I've talked to you guys about this before, but you can see here, zooming all the way back here to late last year and throughout this year, 105.60 has been a critical level for the dollar. Now, in all fairness, this level could technically fail, right? Just because it's serving as support right now and has been over the past few weeks, that does not mean that it has to hold going forward, right? So that level could fail. But as of right now, though, it is holding above 105.60. We're also seeing the market, hold above this trend line off of these lows. So once again, looking at the 4-hour time frame, this is the triangle pattern that has developed ever since the lows back here, and especially since the highs throughout October. So this pattern right here started basically when October started. You can see the start of October is right here, and this pattern started right around that time. So basically all of this month has been just consolidation for the dollar. And again, that's one reason why we've seen markets kind of difficult to trade recently. But I do think we have a massive opportunity coming up here for the DXY. Either break below this level down here or break above the trend line up here. Just keep in mind, though, if we do get the breakdown, you've still got to deal with 105.60. This is still going to be a critical area for the dollar. The same thing goes for this recent high, although to a lesser extent. This one down here, in my opinion, is really a must-hold for dollar bulls. I think if we were to see that fail over the coming days and weeks, then it could really trigger a much larger correction for the DXY, potentially back down here toward this high. Okay, so you see these highs back here. This was really never tested during this part of the retracement here in early September. Okay, so once again, we've got the highs back here, this high, the highs right here before the breakout, and we got a very marginal retest of these wicks. Now, we didn't really get a full retest of this level down here. So if this level were to fail and we were to see the DXY break below 105.60, then I do think pivots like 105 and 104.30 could come into play. Now, with that said, okay, we know that the market's still trending higher, so we have to respect that fact. So if, on the other hand, we were to get a break higher from this trend line up here, and then also take out this high that was put in early October, if we were to see that from the DXY, you're talking about levels like 107.70. Okay, so if we go here to the daily time frame and move out, you can see where 107.70 was a pivot for the DXY back here. Now, I've said for a while, okay, for months actually, that I do think the DXY, or retest of 109 to 110, does seem like the most likely scenario for the dollar. And the reason for that is on the weekly time frame, you can see this huge red candle right back here. This was partially retraced, but there is still a very big part of that was never touched. And candles like this tend to leave a lot of liquidity behind, and markets seek liquidity, okay? So you can see right back here, once again, big red candle, look what happened. It was fully retraced, right? The same thing over here, big red candle, fully retraced. And you can see this time and time again, where we get these at least partial retracements of candles that are this large, okay? So I do think this is going to serve as a magnet potentially for the DXY, to where even if we get a rotation lower, if these levels were to fail and we get that rotation lower down here toward 104.30, I do think that could be the catalyst for the move higher up here toward 109 to 110. Now, if we get the breakout from this area, same thing. Okay, a sustained break above this trend line and also 107.20, a sustained break above these lows and highs back here. Okay, right around 107.70, a break above this, you're looking at same thing, 109 to 110. At least that's my opinion. Obviously nobody knows where this market or any market is going to go. All right, and by the way, guys, if you are enjoying this content, be sure to smash the like button and also subscribe to the channel and click that bell icon for notifications. And if you want my help with your trading, including seeing my trades in real time, be sure to join the VIP group. I'll put a link up here in the top of this video, but I'm in there every day answering questions from members, providing exclusive setups and also daily videos to members that include 5 to 10 different markets. We talk about forex, equities, and crypto. All right, so looking at the DXY, just to kind of wrap up here. Once again, I think this is the key level to keep an eye on, or these two key levels, I should say. All right, so this pattern right here has to break out next week. And that's the thing. That's why I titled this video the way I did, is because this is going to have to break next week because it's a terminal pattern. So the DXY is either going to have to decide to break down from this or break above this level up here, okay? Once again, though, we are still range bound. Even once that happens, the market is still range bound. So keep that in mind. And lastly, too, you have to keep an open mind here, even if we do get an initial breakout. Just because if we were to get the break below here, we could get a retest of 105.60, move back up, that becomes a fake out. The same thing to the upside. We could get a breakout up here, retest the high up here, and then that becomes a fake out. So keep an open mind with the DXY, especially with how sideways these markets have been. All right, that's it for today's video. Once again, be sure to smash the like button, also subscribe to the channel and click that bell icon, and also join us in the free Telegram group, guys. It's kind of a stepping stone between what you get here on YouTube and also the VIP group. Once you're ready, you can join us in VIP. Have a great weekend, and I will talk to you again next week.